us, let's take a look at how the markets performed this week. First to Europe, as at Friday, February 17th. Not a great week ending for European markets as investors continue to assess the impact of inflation alongside company earnings. Euro Stoxx 600 closed at 446.31, down by 0.2%. London FTSE All Share closed at 8,000.2, down by 0.16. The markets in Germany also saw the DAX close at 15,477.8, down by 0.35%, while the CAC 40 in Paris ended the week closing at 7,348.3, closing negative at minus 0.27. Now, the only positive was in Spain, with the IBEX 35 making a 0.1% gain and closing at 9,366.9. At the end of the last weekday of trading on the Nigeria Stock Exchange, a total of 173 million shares in 3,077 deals corresponding to a market value of 3.8 billion naira were traded. Compared with the previous NGX trading day, Friday's data showed a 37% improvement in volume, a 5% improvement in turnover, and 15% improvement in deals. The NSE market cap is at 29.31 trillion naira. And finally, a look at Wall Street on Friday the 13th. Now for some top business stories. In Nigeria, Edo State's Ajoki community has become a major beneficiary of the Energy Resource Ajoki gas-to-power project, receiving 24 hours uninterrupted power supply and a growth in its socio-economic prospects. Powered by Energy Resource Limited and Sahara Group Upstream Company and the Nigerian National Petroleum Corporation Limited, NNPC Limited, the project has the capacity to generate 1 megawatt of electricity round the clock from gas. And that's a fulfillment of Sahara's group's commitments to promoting access to clean energy and promoting the energy transition in Africa. Great news there. Nigerian President Buhari, in a national broadcast on Thursday, has directed the CBN to release old 200 naira notes back into circulation in a bid to alleviate the current cash crunch facing the country. The old 200 naira notes will continue to be legal tender until April 10 and will be circulated along with the new 200 naira, 500 naira, and 1,000 naira banknotes. The president disclosed that in line with Section 20.3 of the CBN Act of 2007, all existing old 1,000 naira and 500 naira notes remain redeemable at the CBN and at designated points around the country. Now, this development came after the Supreme Court on Wednesday extended its interim injunction restraining the federal government from implementing the CBN's February 10 deadline for the naira swap. News outlets in Egypt on Monday reported that the country plans to offer 3 international tenders for oil and gas exploration and production in 2023. This is besides ongoing operations to drill 300 wells until 2025. Speaking at the inauguration of the Egypt International Petroleum Exhibition Conference, Petroleum Minister Tariq El Molla said the country's oil exports jumped 41% in 2022 to 18.2 billion from 12.9 billion a year earlier. He also added that Egypt put forward an international bid for gas exploration in 12 blocks in the Mediterranean and the Nile Delta through the Natural Gas Holding Company at the end of 2022, and that the bidding would continue until May 2024. During the week, Ghana said private foreign creditors may have to accept less favorable terms than bilateral lenders in the country's $30 billion debt restructuring. This position was made known to the country's lawmakers by Ghanaian Finance Minister Ken Ofori-Atta in Accra on Thursday. The move is a setback for Eurobond investors who have been clamoring for equal treatment with other lender groups in the restructuring after Ghana said in December it was stopping payments. But the West African nation is racing against time as it seeks to win concessions from creditors to unlock a $3 billion International Monetary Fund loan by March. Things might be looking up for Britons as employers plan to raise wages by 5%, the biggest pay rise since 2012 in indirect responses to the rising cost of living. A survey published on Monday, however, showed that the 5% pay deals would still fall well below expected inflation. According to the Chartered Institute of Personnel Development, CIPD, 55% of recruiters plan to lift base or variable pay this year as they struggle to hire and retain staff in Britain's tight labour market. This is amidst fears that a surge in inflation could be harder to tame if pay deals continue to rise, according to the Bank of England. All eyes were on the US January inflation data that was released on Tuesday. The report showed a fall in inflation in January, but slower than economists had hoped. Consumer inflation slowed in January but remained higher than many economists expected due to rising prices for housing, gasoline, and natural gas. The CPI index rose at 6.4% annual rates in January, while core inflation increased at 5.6%. These figures mark a slight deceleration from December, when the headline and core CPI increased at 6.5% and 5.7% respectively. Some experts, however, say that a downward trend in inflation may be bumpier than hoped, resulting in the Fed pushing forward with rate hikes through the spring season. Automobile company Ford announced on Tuesday that it plans to cut a fifth of its total workforce in the UK over the next 2 years. That's about 1,300 jobs. Ford's research site at Dunton in Essex will be affected by most of the cuts as the company faces an uncertain economic future and prepares for the transition to electric vehicles. Several hundred back office posts are also expected to be closed at sites across the country, but production sites at Halewood, Dagenham and Daventry will not be affected. UK Conservative MP John Barron called the news disappointing, but Work and Pensions Secretary Mel Stride said it was not just a UK phenomenon. Home sharing company Airbnb has given an outlook for revenue in the first quarter that beats what analysts estimated. The company shared that it expects sales of $1.7 billion to about $1.8 billion in the 3 months ending in March, surpassing analysts' average projection of $1.68 billion. Its shares jumped to $135 per share during the course of the week, the highest since May, signaling continued robust demand following a record year for growth in 2022. Airbnb said that it expects bookings to grow at close to the same 20% pace of the fourth quarter of 2022, as travelers feel more confident and optimistic about booking for the summer travel season. Luxury lifestyle and fashion brand Louis Vuitton has welcomed music mogul and fashion icon Pharrell Williams as its new menswear creative director, effective immediately. The happy singer and award-winning producer fills the vacant spot left by the late Virgil Abloh, who died of cancer in November 2021. The fashion house noted Pharrell as a visionary who had established himself as a universal cultural icon over the past 20 years. Pharrell previously collaborated with the brand in 2004 and 2008. His first collection for Louis Vuitton as the new creative director for men will be presented in June during Men's Fashion Week in Paris. Barely 5 months after assuming ownership of Twitter, CEO Elon Musk hinted on Wednesday that he would be replacing himself as CEO by the end of 2023. Speaking virtually at the World Government Summit in Dubai, Musk said that he needs to stabilize the organization and get it to a financially healthy place before handing over to someone else to run by the end of 2023. On December 21, Musk tweeted he would resign as CEO as soon as he finds someone foolish enough to take the job. He ran a poll on the social media platform days prior on whether he would step down as a CEO. It must be said that most respondents actually said yes. David Malpass is stepping down as president of the World Bank nearly 4 years after former President Donald Trump nominated him to run the 189-nation agency. Malpass will leave the bank at the end of June 2023, though his 5-year term is only due to expire in April 2024. In a statement, Malpass said that he had decided to pursue new challenges, and prior to assuming his World Bank role, Malpass had been a critic of the World Bank, arguing that it had focused too much on its own expansion and not enough on its core mission of fighting poverty. In response to recent press speculation of a takeover, the CEO of Standard Chartered Bank, Bill Winters, stated irrefutably that the bank was not for sale, saying to CNBC that the bank has had no engagement with any prospective bidders and is not seeking any either. In January, First Abu Dhabi Bank said it had considered making a bid for Standard Chartered, but it was not doing so anymore. Standard Chartered saw its shares rise 11% early in February after Bloomberg News reported that First Abu Dhabi was pressing ahead with a potential takeover and was considering making an offer of between $30 million and $35 billion for Standard Chartered. The Financial Times reported on Wednesday that KPMG, one of the world's 4 biggest accountancy firms, would be cutting 2% of its workforce in the US. The cuts will affect more than 700 people. KPMG joined several financial firms, including major Wall Street banks, asset managers, and fintechs, to downsize amid a turbulent macroeconomic environment that has pressured consumers and curbed demand. KPMG increased its U.S. headcount by more than 2,000 at the end of 2021, a reaction to the demand for IT consulting and advisory work during the COVID-19 pandemic. A fierce bidding war for English football club Manchester United could be imminent as Qatari investors plan a $6 billion open bid for the club. The proposal is being put forward by a consortium that includes Hamad bin Jassim bin Jabbar Al Thani, the country's former prime minister and ex-head of the Qatar Investment Authority, who plans to acquire the English Premier Club from the US Glazer family. Current regulations from European footballers' governing body, UEFA, stated that teams with the same majority owner can't both compete in the region's major tournaments, including the Champions League. This could complicate the bid as Qatar Sports Investments, a state-backed entity that's separate to Qatar Investment Authority, already owns French superclub Paris Saint-Germain. Tesla plans to recall more than 360,000 US vehicles to update its full self-driving beta software after US regulators said on Thursday the driver assistance system did not adequately adhere to traffic safety laws and could cause crashes. The National Highway Traffic Safety Administration said the Tesla software allows a vehicle to exceed speed limits or travel through intersections in an unlawful or unpredictable manner, potentially increasing the risk of a crash.